What is up, guys? My name is Bryce Pruitt, this is the M1 Journey, and welcome to the channel. Hey guys, and welcome back to episode 19 of the M1 Journey. I hope everyone is staying warm and safe. I know most of the country, including myself here, are getting pretty hard hit by some winter weather, some snow, and some bitter cold. Actually, right outside my window here is some of the hardest snowfall I've certainly ever seen. There haven't been a ton of big snows in my lifetime where I live, but this is definitely up there for me, so I hope everyone's being safe. As far as market news, of course the market is not open today with it being President's Day, so everything will resume tomorrow. But as far as anything that's happened over the last 7 days, not a real ton going on. It was a pretty flat week, which wasn't totally unexpected considering we had a massive week the week prior, so nothing too much to report on there. But as far as news with the channel, I have a lot of exciting things to tell you guys about. First of all, I have expanded my reach on social media. I now have created a Facebook page that you can find by looking me up under Bryce Pruitt, or I do have a handle at bpruitt YT, and the YT is capitalized. Unfortunately, Facebook does not allow underscores for whatever reason, so I was not able to do my typical handle. And then the other social media I have joined kind of unexpectedly is TikTok. You can find me on TikTok at bpruitt_YT, just like on Instagram and Twitter. I'm not exactly sure what I'll be posting on there. It was kind of recommended to me by a friend, so I am going to try my hand at it, whatever I decide to do, so check that out if you are interested. And then last but certainly not least is I will be announcing my latest gift card raffle. This time I will be raffling away a $25 Walmart gift card. I will be announcing that on Wednesday, so be on the lookout for that. One of the requirements you're going to have to enter the raffle is to both like one of my videos and go ahead and subscribe to the channel. So if you have already done those things, then that is great. But if you have not and you want to enter, go ahead and subscribe to the channel now. Drop a like on this video. It just takes a couple seconds, and it's very simple. So I kind of wanted to do a raffle for you guys to say thanks for helping me out, as well as maybe bring in a few more viewers to the channel. So yeah, that was kind of a lot for some news about the channel, but I want to get into the disclaimer, and then I'll talk about the portfolio, and then I'm going to wrap up the video by talking about some dividend stocks that you guys can invest in to generate passive dividend income every single month. So first things first, guys, of course, I am not a financial advisor. I'm not an expert. I'm just 21 years old, and I make these videos strictly for your guys' entertainment, and it's a hobby for me. So please do your own due diligence and research before making any investment decisions. I just feel like the need to say that just in case you guys really start to listen to my opinions, and don't blame me if it goes poorly. So yeah, let's get into the portfolio. Okay guys, so I'm going to kind of breeze through this pretty quickly. There's not a whole lot to report on, but we did have, like I said, a pretty flat week, up a little bit less than 1%, but we're still made about $200. A lot of that came from dividends, so expect the end of February and March to be a very good month for dividend payments. But as far as winners and losers of the week, only really had one big loser, and that was Pepsi. Pepsi was down almost a full 5%, which, to be honest, I was kind of okay with. I see Pepsi as a good buy right now, and I'm going to talk a little bit more about that later in the video. And then as far as a winner of the week, that would be in growth, and growth overall had a very good week, about 2.6%, and most of that was driven by advanced micro devices being up 6.68%, so that was really my big winner. As far as my activity for the week, I had a couple of dividends. I had Apple pay me $1.06. I had Enterprise Products Partners pay me an even $9, And Pembina Pipeline out of Canada paid me $1.65, but then 25 cents went back to them as part of the foreign withholdings. So I did make a couple of purchases. I saw an opportunity to again buy some Pepsi. Expect me to buy more Pepsi here pretty soon, I would expect. And then I saw another buying opportunity on the 11th with Apple. Bought another $50 worth of Apple when it was kind of dipped down below $135. And then again had another purchase on the 12th with Verizon. So I kind of had a little bit of an influx of cash here recently, so I will be buying a little bit more aggressively than I have been the last couple of months when I see fit. So as far as what's up with the Roth IRA, it was pretty flat here as well, about 0.5%, $3.34 in dividends. So not really anything to report on here. Didn't have any dividends, didn't have any activity over the last week. So with the aggressive portfolio, again, less than 1%, 0.63, only $4.50. As far as what was up and down, PayPal had a huge week, Roku had a huge week, Workhorse was down, but Workhorse also has been done very, very well for me. Bought in at 21.24 and it's up at 36, so that's very good to see. So again, guys, not really a whole lot to report on here. I kind of want to get in and talk about some more dividend stocks to generate passive income every single month. So guys, I kind of want to end the video talking about some dividend stocks that you guys can look into investing with to generate passive dividend income every single month. These are 4 companies that I like a lot, one of which though I am not invested with, but I will explain a little bit more about that later. So I picked these 4 companies again because I like them a lot, and I think they offer a very stable dividend and the room for some growth in the future, both in terms of share price and that dividend. So the first one I'm going to talk about today is one of my favorite stocks, period, and that is Pepsi. Pepsi currently offers a 3% yield at current prices and pays a dividend of $4.09 per year. So Pepsi, I mean, kind of explains itself. Pepsi is almost an ETF into itself with its wide variety of product offerings both in the beverage and snack markets. Pepsi, again, for that reason, is such a good investment. They don't rely too heavily on any one area to really drive the business. They're very well rounded in their approach, and they are constantly adding to that product profile by acquiring either new companies or developing new products. They are very well rounded in that approach. Pepsi, though, has been a little bit on a slide, at least for the last month, and I think at current prices Pepsi looks very, very attractive. That is why you've seen me kind of invest a little bit more heavily in them over the last month. I expect that to continue probably for at least the next month. They actually just reported earnings last week, and they did beat the estimates for earnings, both in earnings per share and in revenue. So that was very good to see, although I thought it was expected that they would be beating their targets. So Pepsi, for that reason, is definitely one to look into buying. So guys, the next company on my list is Procter & Gamble. P&G is pretty much, like I said about Pepsi, an ETF into itself, with their product offerings being so wide-ranging. They make laundry detergent, they make pet food, they make different diapers, they make razors, they make soaps and shampoos, they make cleaning supplies like the Swiffer. I mean, if you name it, they probably have a hand in it, and at any one time, I'm sure most people have at least a handful of P&G products in their house. At this current time, they offer a 2.5% dividend yield and $3.16 per year. So very solid dividend, not on the higher side of things, but definitely very solid. Another reason I like P&G, particularly at these current times, is their share price is really kind of taken a little bit of a drop over the last month. So I think at these prices especially, again, just like Pepsi, are very, very attractive, and I expect I'll be buying up some more over the next month. So P&G is a company I think you can rely on for that consistent dividend, because they've proven for years now that they can grow their dividend as well as appreciate their share price. Just over the last several years alone, P&G has almost doubled in their market cap. So part of that's by vertical integration and acquiring new brands and companies. So I think for the long haul, P&G is a very, very good investment, and one you should strongly consider looking at. So the third company I want to talk to you about today is the Home Depot. For anyone who watches the channel pretty frequently knows I'm actually not an investor in Home Depot. That's only because I have more experience both as a customer and as an employee at Lowe's. So that for that reason alone is why I don't have a holding in Home Depot. But Home Depot is a great company. They are the largest home improvement retailer in the world for a reason. Their market cap somewhere around $300 billion, which is very, very impressive. So at current prices, Home Depot's dividend is around 2.2% annually, and they pay out $6 per share. So that's a little bit on the lower end of dividends, but still solid enough to make a little bit of side income. Home Depot has been growing very, very steadily over the last several years. I think since 2016 alone, their share price has nearly doubled. But for the last 6 months or so, we've seen a slight decline in their share price. They were hanging around the $290 per share range, and now hanging around the 270s. I haven't looked too much into their business to see what's kind of stagnated some growth as far as share price, but based on everything I've seen, Home Depot still appears to be doing very, very well and are well equipped to handle the future. Not only do they have a great in-store presence, but they are also developing a pretty thorough online presence as well as partnering with a lot of smaller time companies to get their products out to market, which is very, very cool. So Home Depot is another company that I would highly recommend anybody looking at, especially if they're starting out investing. It's been very, very solid, and I expect the DIY market to continue to grow for the foreseeable future. So the fourth and final stock I want to talk about today is Realty Income. Of course, it's a favorite among both young investors and old investors alike, mainly for one unifying reason, and that is they are the monthly dividend paying company. This is the only company I'm talking about today that does not pay quarterly. They instead pay a dividend every single month, and a pretty healthy one at that. They offer a 4.5% yield, and they pay $2.81 per year, which is a very, very generous dividend, and one that they've been paying for a very, very long time. That's kind of why they've got the reputation of being a almost strictly dividends company, even though they are a REIT. Now, I know there's been some concern lately about the real estate market, especially investing in REITs specifically, but Realty Income is about as solid as you can get, especially since they focus on investing in freestanding single tenant properties, which is a plus for them. It's not like they have a heavy portfolio of these multiplexes like malls and other community centers that are kind of going out of style in our society, but they do focus on some of the smaller time tenants, which is nice and should remain stable. There could be some concerns if the economy does not come back as strongly as possible, that there could be struggles for people to meet their obligations with rent, and maybe some breaking of leases, but I expect that Realty Income will deal with this. They have shown to be pretty strong even when the economy is not performing as well. So I think Realty Income for the foreseeable future will remain a very, very solid investment. You may not see a ton of share price growth. Over the last several years, you've seen them kind of rotate in and out of the $50 to $60 range, but I think barring something completely unexpected, I think we should see it kind of hover in that range while also getting monthly dividends, which is a nice plus. So again, Definitely check it out if you haven't already. I assume most people who invest are probably pretty familiar with realty income. So guys, those are just 4 companies that I thought maybe you guys should look at if you are looking to generate passive income. So guys, if you did enjoy the video, don't forget to like, and if you haven't yet done so, go ahead and subscribe if you enjoy my content, and also be on the lookout for the announcement for the Walmart gift card raffle. I'm very excited to get it up and running, and then the drawing will be 2 weeks from this Wednesday. So again, just be on the lookout for that. It was kind of a longer video, but ready to wrap things up. So look out for Let's Discuss on Thursday as always, and I will catch you guys in the next one.